This chart represents ProShares Ultra Pro Russell 2000 ETF, an ETF that tracks the performance of small-cap stocks in the Russell 2000 index, with a leverage factor of 3 times, meaning it amplifies the index's movements. Let's break down the analysis. Key components. Price action. The current price is $55.25, with an increase of $3.23, which is up 6.21% in the latest week. 2 key moving averages. The 50-period EMA, or exponential moving average, is at $46.14, acting as a key support level. The price is above this moving average, indicating bullish momentum. The 100-period EMA is at $47.14. This moving average also acts as a support level. The price is above both EMAs, which is a positive sign of an upward trend. MACD, or Moving Average Convergence Divergence. The MACD line, which is blue, is at 3.00, and the signal line, which is orange, is at 2.46, indicating a bullish crossover. This suggests that the bullish momentum is building up. The histogram is in positive territory, confirming growing bullish momentum. The RSI, or Relative Strength Index, is at 58.78, which is in the bullish range, above 50, but not yet overbought, above 70. This indicates moderate buying pressure and suggests that there is still room for further upward movement before the price becomes overbought. The Williams %R is at negative 22.13, close to the overbought zone, which is above negative 20. This indicates that the ETF is approaching overbought conditions, signaling caution for potential short-term price corrections. The general trend for ProShares Ultra Pro Russell 2000 ETF, or URTY, has been in an upward trend recently. The price has broken above both the 50-period and 100-period EMAs, which are key indicators of a bullish market. The MACD shows a bullish crossover and a positive histogram, suggesting strengthening momentum and supporting the idea of continued upward movement. With an RSI near 59, the ETF is showing strong buying pressure, but it has not yet reached overbought territory, meaning there could be more room for gains before a potential pullback. The Williams %R is close to the overbought zone, signaling a possible short-term consolidation or correction if the price continues to rise. Recent events affecting price. 1. Macroeconomic conditions. Small-cap stocks, which the Russell 2000 represents, are sensitive to economic trends such as interest rates and economic growth. Recent optimism regarding inflation control and potential pauses in Federal Reserve rate hikes could be boosting investor confidence in small-cap stocks, leading to the rise in URTY. 2. Economic stimulus and growth. Signs of stronger economic growth or expectations of government stimulus measures may positively impact small-cap stocks, which often benefit from domestic growth factors more than large-cap stocks. 3. Earnings season. Positive earnings reports from small-cap companies in the Russell 2000 index may also be contributing to the rally in URTY. Detailed analysis, short-term. The price has shown strong gains over the past week, breaking above both moving averages. The bullish MACD crossover and RSI approaching 60 suggest continued upward momentum in the short term. But caution is warranted as Williams %R indicates potential overbought conditions. Midterm. If the price holds above the 50 and 100-period EMAs, it could confirm a stronger bullish trend. The RSI shows moderate strength, and the MACD confirms increasing buying momentum, suggesting that the trend could continue if broader economic conditions remain favorable. Long-term. The ETF has recovered significantly from previous lows in 2022 and early 2023. If the price continues to hold above the 50 and 100-period EMAs, the long-term trend could shift from bearish to bullish. In conclusion, the ProShares Ultra Pro Russell 2000 ETF, URTY, is currently in a bullish phase, with strong price action supported by technical indicators like the MACD, RSI, and moving averages. However, the Williams %R suggests caution, as the ETF is approaching overbought conditions, which may trigger a short-term pullback. Economic factors, including Federal Reserve policy and earnings reports, are likely contributing to this positive momentum. This chart represents ProShares Ultra Pro QQQ ETF, also known as TQQQ, which is a leveraged ETF that seeks to provide 3 times the daily return of the Nasdaq 100 Index, or QQQ. Let's analyze the key elements of the chart. Key components. Price action. The current price is $73.89, showing a slight decline of 41 cents, or minus 0.55% in the last day. 2 key moving averages. The 50-period EMA, or exponential moving average, is at $60.91, acting as a strong support level. The price is comfortably above this level, indicating a bullish trend. The 100-period EMA is at $53.01, also serving as a support level. The fact that the price is well above this EMA further supports a bullish outlook. MACD, or Moving Average Convergence Divergence, shows that the MACD line, which is blue, is at 7.31, while the signal line, which is orange, is at 7.46. This indicates a bearish crossover, meaning the MACD line is just slightly below the signal line. The histogram is slightly negative at minus 0.1511, indicating weakening momentum, although it's not strongly bearish yet. The decreasing histogram suggests that buying momentum is slowing down and the price may face some consolidation or a minor pullback. RSI, or Relative Strength Index, shows that the RSI is at 57.52, which is in the bullish range but below overbought levels, which are above 70. This suggests that there is moderate buying pressure, and the price has room to rise further before reaching overbought conditions. The Williams %R is at negative 27.94, indicating that the ETF is close to entering overbought territory, which is above negative 20. This suggests that while there is still room for upward movement, caution may be needed as the price approaches the overbought zone. The ProShares Ultra Pro QQQ, or TQQQ, is in a bullish trend overall. The price is above both the 50-period and 100-period EMAs, which typically indicates strong upward momentum. However, the slight bearish crossover in the MACD suggests that the bullish momentum could be slowing down in the short term. The recent bearish crossover indicates weakening buying pressure, but the change is subtle, suggesting that this may only be a temporary consolidation phase rather than the start of a significant downtrend. With an RSI near 58, the ETF is showing positive momentum, but it's not yet in overbought territory. This leaves room for further gains, but the market is approaching a level where the price may soon become overbought. Close to the overbought zone, the Williams %R suggests the ETF is nearing a peak in the short term. A pullback could be expected if the Williams %R crosses into overbought territory. The ETF has recently seen some gains, but the MACD bearish crossover and negative histogram suggest that a minor pullback or consolidation could occur before further upward movement. RSI and Williams %R both suggest that there is still some room for gains, but the ETF is approaching a potential overbought zone, signaling caution in the short term. As long as the price remains above the 50-period and 100-period EMAs, the bullish trend should remain intact. A break below the 50-period EMA would be a signal of weakening momentum, but this is not yet a concern based on current data. The ETF is recovering from a broader downtrend that occurred earlier in 2023. The price has been steadily moving upward, and with continued support from the broader Nasdaq 100, this trend may continue. The ProShares Ultra Pro QQQ, or TQQQ ETF, is currently in a bullish phase, supported by technical indicators such as its position above both key moving averages. The MACD suggests some short-term weakness or consolidation, but overall momentum remains positive based on the RSI. The Williams %R indicates caution as the price nears overbought conditions. Investors should watch for short-term corrections while the long-term trend remains bullish as long as key support levels hold.